Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing FLYX stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a small cap company, 600 million market cap. They're trading at $4.46 a share, and they have 138 million shares outstanding. FLYX owns and operates private jets. It offers jet charter services, aircraft maintenance, repair, overhaul, refurbishment services, as well as wholesale and retail ad hoc flights, a jet club program, partnership program, and fractional program. A fractional ownership means you don't have to put up all the money. If it costs $100,000 to rent a jet, you can buy a fraction of that, maybe 1/10, which will cost you $10,000, and you get use of it 10% of the time. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Negative free cash flow each year. They still haven't hit break even yet. Net income is the profit or loss on the income statement. It's revenue minus expenses. A small positive in 21, but negative after that, and the negative is getting worse. Negative 110 million in the trailing 12 months. Revenue is a sales for the company, and that grew 54% from 21 to 22, peaking at 320 million. Then it's gone down a little bit after that to 315 million, then under 300 million in the trailing 12 months. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's negative 400 million. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of negative $477 million. We divide that by 138 million shares, and we get a calculated stock price of 0. They're trading at $4.46. So it's a big fat sell according to the model. I don't see any scenario where they have positive free cash flow. I did run a few different models, but if you think differently, let me know in the comments and I could revisit this. Simply Wall Street does not value this stock. Also, there are not any analysts that price this stock. There are 16 companies in the same industry as FLYX, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spent $62 million in CapEx. These are the investments in property, plant, and equipment. When they buy a jet, that dollar amount goes into CapEx and is carried in the balance sheet and depreciated over its useful life onto the income statement. A terrible debt to equity ratio, 6.7. For every dollar of equity, they have $6.70 of debt. Their free cash flow is better than the median average, but it's still negative. They rank 11th in market cap. Actually, they should be 12th. They're lower than Allegiant. Price to book is 13.5, the worst on this list. We can't look at their PE, negative earnings. We can't look at their price to free cash flow, negative free cash flow. They have the worst price to sales on this list. Investors are paying $2.10 for $1 revenue. They generate 300 million of revenue, and we can't look at their 5-year annual revenue growth rate. They haven't been public that long. Here's their latest income statement, the second quarter of 24, second quarter of 23. Revenue is down. It was 100 million, now it's 79 million, down about 20%. Expenses are up about 11%. It was 90 million, now it's 100 million. Cost of revenue is 72 million. Their big expense is payroll. SG&A, 21 million, depreciation and amortization, 7 million. Last year they had positive operating income of 10 million. Now they have negative operating income of negative 22 million. They spend 5.7 million of interest on their debt, a little more than last year. Income before taxes, 28 million. They don't pay taxes since they don't make any money. They have 19 million shares outstanding. They don't show how many they had last year. So to summarize, I have them trading at 0, so it's a sell. I give them a ranking of 1 out of 10. Would I buy at 1 out of 10? Same thing with ratios, 1 out of 10. We can't look at their PE or price to free cash flow, and they have a weak price to book and price sales. Financials, 1 out of 10. Actually, I'm going to change the financials to 2 out of 10 because their revenue is up 43% since 2021. It is down since 2022, but I'll give them a little credit. But they still have negative free cash flow, so the numbers look horrible. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking the link in the description below. Thanks for watching.